Currently, the US stock market is in free fall mode, being down over 5% in the last 2 weeks. But before you guys panic sell, I do want to talk about some strategies that we can use to create some generational wealth coming out of a said market crash. Now, whether this market crash or correction is coming in the next few weeks, the next few months, or even the next few years, this information that I'm going to be talking about today is going to be very, very useful because we all know a market crash is inevitable, whether that is, like I said, in the next weeks, months, or years. Now, before I do go ahead and get into this video and break this down heavily, I would like to let you guys in on a special little offer. We do have our free Discord link down in the description down below. You guys can join over 500 plus profitable members. We already have $500,000 in team wins year to date. Now, we are targeting $3 million in team wins by the end of this year. So hopefully you guys can join up and be a part of that because that is going to be pretty special. Now, let's go ahead and talk about a few little things that I have, which is going to be when market is crashing, I like to do these three things. Now that is going to be holding around 10 to 20% cash. I did like to sell out of my main positions where I have the most profit on them. I like to take some cut on them, take some profit. That is really healthy to do within your portfolio. Now, what I'm doing with that cash is I'm putting, 10% of that 10% away for some of my long terms, but I do like to DCA into the S&P 500, QQQ, VOO, or VUG, whichever one you guys choose throughout of this, or if you guys are choosing multiple of these, whether or not you guys are doing one or four of these, I would like to see you guys choose one of these to DCA into, and that is going to be dollar cost averaging in, where maybe you put in $5 every day, $10 every week, $20 a month, whatever you guys can do to get into the market as it does fall, that is going to serve you guys long term, and that is going to be very, very profitable once we do come out of, said market crash. Also, I would like to tell you guys that I would definitely suggest to hodl your DCA, hodl and DCA into your long-term positions. Personally, right now, I only hold two long-term positions that I'm going to be DCAing into, which is going to be Hims and Hood. I like them for long-term companies. I think that they had a strong start into this bull market, and then I think this next bull market is really, really going to impact them heavily. I think they can both around 5x from where we are today, and I think that will come once we get out of this next market correction. Also, guys, take emotion out. When the market is going down and you're seeing your portfolio lose some money, you have to understand that we have to take it from the mindset of when the market is down 2%, everyone's portfolio that is holding VOO, S&P, anything like that long term is most likely down on the day. So you have to think you're one of millions of investors that are down. You guys want to be honestly losing the most money. You want to have the privilege to lose the most money. I know that sounds insane, but if your portfolio is, $10,000 and you lose 10% a day, that's $1,000. That really sucks. But if you have $1 million and you're losing 100 grand, at least you have the privilege to do that. As the market does always recover, really you haven't lost anything until you sell. So $1,000 loss or $100,000 loss is no big deal. But my point is, you want to be privileged enough to lose the most money. If you're going to take a 10% sample size, if I have $100,000 in my account and I'm losing 10,000, I can't wait until I have $1 million in my account and I can have the privilege to lose $100,000. Obviously, you're not losing that money. That is just a little bit of an idea that I like to do to kind of just keep myself sane when the market is in free fall mode like this. Now, we did go ahead and catch it on a day just on Friday where we did have a pretty decent green day, but I do think that there is some more downside targets. And my main catalyst for this is going to be, tariffs, earnings reports. A lot of those earnings reports did come out pretty decent, but we saw pretty bad reactions. A lot of these stocks are overvalued, and a lot of these stocks have been free falling as of recent. Like Nvidia has been down around 20%, Palantir has been down around 30%, Hims is down from lows of around 40%. So that is just kind of a sign when we get a little bit of a blow off top with some of those big companies, like Palantir going from 125 to 80 after 20xing in just 2 years' time. But I do want to talk about some downside targets because this is what I'm looking for short term. I think we come up to this golden zone, which is going to be our downside target here. And from there, we are either going to, break through and maybe this isn't the correction that we're looking for. And we do continue back to the upside, which is very possible. But what I am expecting is to hit our heads somewhere in between this golden zone, whether that is slightly beyond it. Maybe we go back up and fill this gap right here and then continue down. But either way, I do expect some more downside. I do not think that this is going to be recovered. I do think that we are kind of pushing towards a correction of some sort, whatever that may be. Obviously, I don't want that for myself or for anybody, but inevitably it's got to happen and it's going to happen at some point. So honestly, I kind of want it to happen so I can DCA into some long-term stocks like the S&P QQQ, VUG, or VOO. And personally, I'd be choosing VUG. I'm looking to start a brand new position, selling out of some of my other long-term S&P like holdings and get into VUG long-term. And I plan to DCA probably around $20 a day into that. And I'm trying to set it up where I can do it over probably the next year because that is really how long a downturn in the markets normally last. It's normally around 10 months. But given that bull markets are normally around 3 to 5 years, so we can really zoom out and see the bigger picture and say, hey, this is really going to suck. Obviously, a lot of your portfolio is going to be lost, but you're not losing anything until you sell. That is the importance of holding. If you guys sell at the bottom, then you have nothing to buy back and you have those shares that are now gone. Yes, you can buy in at a lower price, but you've lost money. If you would have just held, you wouldn't have lost money. You might not have made profit as fast, but you know, the in between with profit and loss is definitely going to be off if you guys are choosing to sell. So I would highly recommend choosing some long-term companies that you guys can trust coming out of this next bear market and pushing through the next bull market where you guys could see in the next 5 to 10 years that these companies could have some good upside. And that is why I've chose companies like Hims, Oscar, Hood, Oklo, ASTS. Those are just some of my positions, but I'm really planning to DCA heavy into Hims, Hood, and then maybe Oklo or ASTS. I have not chosen yet, but then on top of that, the S&P and so forth. But let's go ahead and talk about some targets if we are to get a correction. Now, I know this chart is kind of jumbled here, but my main downside target is going to be at highs of from the uh, 2022 correction, where we do have a top back there at around 470. So I think we can bounce anywhere from 470 to around 453. Now that is a pretty big downturn. Obviously, that is probably, I don't know. I think that that is pretty realistic. I don't think that that is a crash by any means. We can go ahead and look at our targets for now, where that would be down around 23%, which is a pretty average, uh, market correction. And I think that's pretty needed, especially coming out of this absolutely insane bull run that we've had since the lows right here, where we did just absolutely explode up 6x in the last like 10 years. So I do think that this most recent bull market has been a little bit too parabolic. So I do think we do need a little a bigger type of correction, taking us down to around $453 on the S&P here, where that would be around 23.65% from where we are today. Now, I can also see targets only taking us down to around 495, where we can maybe catch here, but I don't really see that being a thing or being, a big possibility. We could also see something even as high as 525. I believe that would still be around, let's see from the highs actually. That'd be around 20%. That is totally possible. 513, 525 is probably a little unrealistic. That's only a 14% drop. But from actual true all-time highs all the way down to 453, that'd be around a 25.87 move. So that is a pretty strong move. That would definitely be something that I would be looking at when I'm looking at the markets long term. That is something that I would maybe save some of my DCA cash and go heavy at these points. That's what I do with my money. I DCA most of it in, and then I do have a little bit where I do, go super heavy in at some point. So I would probably go heavy, maybe right at this point right here at 520 ish. Maybe a little bit right here, seeing if we could get a bounce back to all-time highs at 564. Maybe we just need a big cool off. And then once again, I would go very, very heavy right here under 470, all the way down to around 453. I think that would be the low. I don't really see going much lower than that. But I really do expect to chop down, just keep hitting point to point here on my resistance, and then eventually just keep falling. Whether that does take, 5 months to get all the way down there and then a few months to recover, or if that is a slow downturn for the next 8 to 10 months and we don't see any green for quite some time. But what we can also do is look at some other companies like Nvidia here, where I'm actually going to take this target away. But they are kind of poised to see a little bit more downside. So we could really target probably around 60 to 50 for them. They look like they are probably going to be hit pretty hard from this. I do not think that Nvidia is going to be one of the better stocks to hold right now. I do hold, or I was holding some Nvidia. I ended up selling after earnings. I made a pretty good profit on that, and I wanted to get out because, they reported 73% margins, and the market did not find that good enough to push the stock up. And that was a clear indicator for me that something is up. I really did, get that idea coming from that 73% margin. That's a crazy, rate. They beat double side on earnings. They brought in 40 billion and kept 22 billion of that. That's just insane. And then the market still wasn't happy enough with that. So that was a sign for me that, the markets could be looking to take a hit soon. And that is, what's happened since. So I do think Nvidia will drop some a pretty good bit, but I would like to, choose this as a position to DCA in on the way down. And then the position that I'm probably the most excited for if we do get a big drop is going to be Google. I think that if we can get Google back down in this 130 range, I don't know if we get all the way back down to this $85 range. But if we did, oh my gosh, I might full port Google because this company is going to be even bigger than it already is in the next 10 years with their computing, with their AI, with their cloud. They have everything that makes a great business. They have an economic moat around everything. They really do control the internet. Them and Meta really do control the internet along with Microsoft. But looking at them with, their cloud revenue, their YouTube revenue, their Google AI revenue, their Waymo revenue, and then what they're doing with computing is really, really impressive. And I do think that they're even undervalued at this price. And I think that they're probably the cheapest Mag 7 stock. So anything under 150, I'm going to start my DCA process into Google. And then as well as getting down to around the 125, probably around this mark right here, I can actually go ahead and draw out some levels. I plan to start heavy DCA, excuse me, once we do get below this red line right here, and then I will probably end up buying heavy once we do get past around this level right here, if that is possible. Now that would be a pretty big downturn, but we can see from their last uh, bear market, they had a decline of around 45%. So if we were to take 45% from today, that would bring us down to around. So you kind of, we're pushing down towards that target. It's around 41%, and then 45% would take us down to around 414. So if we were to see a similar market crash to what we saw in 2022, I would definitely be a buyer below 150, and I would DCA heavy under 122 in Google. And that is just a little example about how I would go about buying. I really do not like to look at my portfolio at this time. I have been down quite a bit. Everyone's been down quite a bit. I recently hit 51K, and now we're, pushing towards below 40K. And that is not because I've done anything wrong. That is just some true transparency from me, because this is what happens when the market takes a turn. I'm still in these long-term holds. I do not think that there is any problem with any of these companies. There's nothing wrong with them fundamentally. This is just a correction that needs to take place for a healthy market. And losing some money is okay. I haven't lost anything because I haven't sold anything. That is really where you know, the divide is between a profitable investor and a non-profitable investor. Profitable investor is going to hold because they understand the market always recovers, and if they are smart enough to choose a long-term stock that has good fundamentals, it will always return to that intrinsic value price no matter what. So that is what you guys have to keep in mind, even if you guys are seeing, you guys are losing, 10% of your portfolio over the next couple months. That is okay. That is normal, guys. You have to understand that when these market turns take a 20% loss, that means every single person that's holding SPY or QQQ, for the most part long term, most of those dudes looking to retire, they're losing 20% of their money. And at least with most of the people watching this video, we're pretty young. So we have at least the time to recover that and then some. So this is a really good time for us to start compounding our portfolios at the lows. So these next few bull markets for the rest of our lives can really, 5, 10, 20x our portfolios over the next 10, 20, 40 years. So that is really just going to be my opinions on the market. I do think that we are headed towards a correction, but I want you guys to let me know what you guys think in the comments down below, and I'll see you guys in the next video.